Welcome back to Candlestick Signals for today's market. August 15th, 2025. Buckle up, traders, because we've got a roller coaster of candlestick signals to unpack. From bullish engulfing patterns in tech giants to hammer formations in energy stocks, today's session was a technical analyst's dream. But before we dive in, let me ask you this. Are you ready to decode the market's hidden messages and potentially unlock your next big trade? The U.S. equity markets presented a mixed performance today, with the Dow Jones Industrial Average touching new record highs, while the S and UHS, T500, and Nasdaq saw slight declines. Key megacap stocks, including Apple, Amazon, Meta, Alphabet, Tesla, Nvidia, and Microsoft, continued to dominate market capitalization, commanding over 40% of the S&P 500's total value. This concentration of power in a handful of tech giants has been a defining feature of recent market trends. And today's session reinforced their influence on overall market direction. Let's break down the candlestick structures that emerged during today's trading. We observed several prominent formations that provide valuable insights into market sentiment and potential future movements. The bullish engulfing pattern was primarily seen in megacap technology stocks and select industrial leaders. This pattern typically signifies strong reversal momentum from prior pullbacks, providing bullish confirmation signals after downtrends. In the energy sector and among mid-cap stocks, we noticed hammer patterns forming. These candlesticks, recognized for their small bodies with long lower shadows, indicate buyer strength after early session sell-offs. Growth stocks were dominated by Morningstar patterns, a three-candle bullish reversal formation widely interpreted as a strong entry point signal after a downward trend. Defensive sectors displayed doji star patterns, signaling indecision and the need for further confirmation before taking new positions. Meanwhile, the financial sector exhibited tweezer tops and bottoms, highlighting resistance or support levels significant for potential price pivots. Now, let's dive into the technical interpretation of these patterns across different sectors. In the technology sector, which includes information technology and communications, major names such as Apple, Microsoft, Nvidia, and Meta showed bullish engulfing and Morningstar signals around support zones. These formations indicate possible breakouts and uptrend confirmation, suggesting that the recent strength in tech stocks may continue. The energy sector presented hammer patterns at session lows, suggesting renewed buying interest and priming the sector for a potential rebound. This could be particularly interesting for traders looking for cyclical recovery plays. In the industrial sector, we saw engulfing and hammer patterns, notably in stocks like Ingevity Corporation, NGVT. These formations highlighted potential reversals and tactical entry opportunities for savvy investors. The financial sector displayed tweezer tops in leading bank stocks, cautioning against premature buying. This resistance signal suggests that traders should exercise caution when considering long positions in financial stocks at current levels. Small-cap stocks showed Morningstar and doji signals, flagging emerging rebound opportunities. This development is drawing attention to renewed interest in market breadth and potential rotation into smaller companies. Let's take a closer look at some sector and stock highlights. In the technology sector, Apple and Microsoft formed bullish engulfing patterns, confirming the ongoing uptrend. The industrial sector saw hammer and engulfing patterns in stocks like Ingevity, NGVT, indicating reversal potential. Energy stocks, particularly in the mid-cap space, formed hammer and harami patterns, setting up potential swing trade opportunities. Financial stocks, especially select banks like JP Morgan Chase, showed tweezer tops, warranting caution due to potential resistance. In the consumer cyclical sector, Tesla and Amazon displayed Morningstar patterns, signaling bullish reversals. The S&P Small Cap Index exhibited Morningstar and doji formations, hinting at a possible breadth recovery. Sentiment in the market remains cautiously optimistic. Led by enthusiasm for AI-centric technology stocks and infrastructure plays, traders are keeping a close eye on signals from the Federal Reserve, inflation readings, and global trade headlines, all of which could influence market direction in the coming days and weeks. Looking ahead, we anticipate ongoing sector rotation, likely favoring technology and growth themes. However, the potential for elevated volatility remains, especially around financials and defensive sectors. Confirmed bullish reversals are attracting selective long positions, while resistance levels in financials are tempering aggressive trades. Now let's summarize today's market action with a quick rundown of major indexes and sectors. The Dow Jones Industrials hit record highs before settling with a gain of 35 points, forming a bullish engulfing pattern that suggests continued upward momentum. The S&P 500 saw a slight decline of 0.18%, but Morningstar and Doji patterns indicate rebound potential. The Nasdaq fell 0.4%, with weakness in chipmakers. But hammer and engulfing patterns in growth stocks point to a possible reversal. The technology sector, particularly mega-cap stocks, maintained its uptrend and now accounts for over 40% of the S&P 500's total market capitalization. Bullish engulfing patterns in this sector provide strong confirmation signals for continued strength. The energy sector showed mixed performance, with mid-cap stocks rebounding. Hammer and Harami patterns suggest potential entry opportunities for traders looking to capitalize on the sector's cyclical nature. Financial stocks encountered resistance at recent highs, with tweezer top formations warning of potential reversal risks. The consumer discretionary sector had a mixed showing, but growth stocks outperformed, with Morningstar patterns emerging as bullish signals. When we look at major candlestick formations by industry capitalization, the technology sector stands out as the dominant force. Frequent bullish engulfing and Morningstar reversals support strong breakout trends in this space. The energy sector's hammer and Harami patterns at sector lows suggest a cyclical recovery may be underway. Higher market cap banks in the financial sector are experiencing tweezer tops and doji stars, flagging potential resistance levels. Industrials and consumer cyclicals are showing hammer, engulfing, and Morningstar signals, indicating tactical trading setups and recovery potential. In conclusion, August 15, 2025, showcased a technically resilient market, with most major sectors registering significant candlestick reversal formations. The leadership of bullish signals in technology, industrials, and energy sectors is particularly noteworthy. While mega-cap stocks continue to dominate by capitalization and trend direction, traders are advised to remain vigilant. Applying actionable candlestick signals for tactical entries, while respecting resistance in overextended sectors, could be a prudent strategy in the current market environment. We expect sector rotation to persist, which should benefit patient, technically driven market participants. Overall, today's candlestick landscape highlights a confirmation bias toward further upside, especially in growth and AI leaders. However, select defensive caution across financials and utilities is warranted. As we move forward, keep a close eye on these technical signals, and remember that in the world of trading, knowledge is power, but timing is everything. And there you have it, folks, a comprehensive breakdown of today's market action through the lens of candlestick analysis. Whether you're a seasoned trader or just starting out, these patterns offer valuable insights into market psychology and potential future movements. Stay tuned for our next update, and until then, happy trading. Thank you so much for watching. I hope this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, and subscribe and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is, and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.